Are you seeking a private hard money loan for vacant land? In this video, I'm going to explain the guidelines for getting a land loan, the different classifications of land, the typical pricing, and how to find direct lenders that do consider vacant land loans. I'm Butani, CEO of PrivateLenderLink.com, where investors and brokers find direct, private hard money lending companies throughout the United States. If you're in the investment real estate business and want to gain insights into private mortgage lending, subscribe to our channel and be notified every time we release a new video. A very small percentage of private and hard money lenders in the United States will consider land as collateral for a loan. The reason is, no lender wants to end up owning a piece of land. You see, private mortgage lenders are always thinking about the worst case scenario, which is, if you default on the loan, they have to foreclose and they may end up owning the property. Most private lending companies that do end up with a property after foreclosure will quickly try to sell the property, and land is the hardest property type to sell with the smallest pool of potential buyers. So in order to justify the risk of lending on vacant land, the lender will be much more conservative than they are with loans for improved properties. So here are the guidelines for getting a land loan from a private or hard money lender. Let's start with the loan purpose. Private lending is only for investment purposes. If you're buying land on which you're eventually going to build your dream home, that's a consumer purpose mortgage and not something a private lender will consider. If you're cashing out equity on a piece of land, the funds must be used for business or investment purpose. Next, let's talk about leverage. The maximum loan to value is 50%. That's the same whether it's a refinance or a purchase loan. If you're buying land, you'll need to have a cash down payment of at least 50% of the purchase price. Or some lenders will consider using equity in another investment property instead of cash. This is called cross-collateralization. If you're refinancing or cashing out equity, the maximum is 50% of the as-is value, and no lender will consider a second mortgage on vacant land, so it has to be a first position mortgage. Not all lenders will go up to 50%. Some lenders max out at 25%, and some go up to 40%. And there are a few factors which could determine the lender's maximum leverage on each deal, including the location, the type of land, the land status, and its potential use. Now let's briefly go over the various types of land and statuses, because this will be discussed when you request a land loan. First, the location is one of the most important factors, and most private lenders will only consider land if it's in an urban or suburban area. Some lenders only consider infill land, which means the lots surrounding the subject property are developed with buildings on them. If your land is surrounded by other vacant lots, it will be less attractive for a lender. If the property is timberland, meaning it's filled with trees in a forest-like setting, a very small number of lenders will consider it, but the LTV has to be extremely low, say under 20%. If the subject property is agricultural land, that may be more attractive to a lender than timberland because it likely generates income. However, ag land also has a limited pool of lenders that will consider it. If you do find a lender for ag land, the first thing they will ask is what type of crop is grown on the land. Another classification of land you may hear is covered land. This term is primarily used in commercial real estate deals where there's an existing structure on the property, but the plan is to tear it down once the new development project is approved. Some commercial property private lenders provide bridge loans for these properties with a plan to be paid off by a construction loan. In addition to the land classification, the lender will ask for the status of the land or the development stage. First, is it entitled? Has the city or county approved it for a specific use, such as a single-family home, multifamily, retail, etc.? Entitled land is more attractive to a lender than unentitled land because it's easier to sell, just in case they end up owning it. If the property does not have any utilities connected to it, it's referred to as raw land. If it does have water, sewer, electricity connected, then it's past the stage of being raw land and may just be called vacant land, whether it's entitled or not. If your land has building approvals and is considered shovel-ready, then you're ready for a construction loan. However, some investors will get their land to the shovel-ready stage and then sell it to the developer. If this is the case, a short-term bridge loan can be a good financing solution until the property is sold. Once you've determined that your land loan qualifies based on the loan purpose, the LTV, the location, and its stage, the lender will want to know what your exit strategy is. How will the loan be paid back? Are you planning to develop the property and have the land loan paid off by a construction loan? Are you planning to sell the land? Will another one of your investment properties be sold off to pay off the land loan? If you don't have a solid exit strategy, it will be very difficult to get a loan from a private lender. So what's the typical pricing for land loans? This varies by region, location, and many other factors, but it typically ranges from 10 to 15% plus 2 to 4 points. I've seen some land loans go down to 8% for entitled land in prime urban locations with an extremely low loan to value. Most lenders will require you to make monthly interest payments. Since land doesn't generate any income, you'll have to show the lender that you have the ability to make those payments. To avoid having to make monthly interest payments during the loan term, you could ask the lender to build an interest reserve into the loan, but not all lenders will consider this. When you use our website privatelenderlink.com to find a lender, you can filter the search results to easily find out which lenders consider land loans. From the loan type list, select either private money, hard money, residential bridge, or commercial bridge. The first three will have similar search results. Commercial bridge tends to show lenders that only lend on commercial properties with a minimum loan amount of $1 million. Next, type in a state or major metro area and hit enter. Look for the filter section and click refine results. From the property type field, select residential land or commercial land. Click on each lender's profile to learn about their guidelines, rates, fees, and much more. Scroll down to the section for land loan criteria and you'll find a few additional details about the requirements for land and their maximum loan to value, maximum loan to cost, and a few other details. When you're ready to reach out to a lender, click the green contact button to find their phone number and a form to send a simple email, and you can even visit the lender's website, or you could fill out a detailed loan request form. If you found this video to be helpful, please click the like button and be sure to check out our other videos about private and hard money lending. Thank you for watching, and see you in the next video.